Morning, Michelle. Thanks very much for joining us on Blue Notes on the morning of the interim result. In recent years, and with the simplification program that's been so fundamental to the bank, the results had a few one-offs and different things. But I wonder for this, can you talk us through the ongoing bank, as it were, and where you saw the strengths and challenges?
Yeah, sure, Andrew. I mean, it was a really good start to the year from institutional. I mean, that business has been through enormous change over the last 3 years, and it's good to see our hard work paying off. So we really saw that come through strongly. The New Zealand business had a pretty consistent result, pretty in line with prior periods. Australia certainly had its challenges, and that's something we're doing a lot of work on. I think when I look, if I add it all up at a group level, because of our buyback, because we bought back $3 billion worth of shares over the last little while, our EPS increase was 5%, which was more than the growth in profit. And our balance sheet is really, really strong.
And one factor that they're seeing in the results this year is remediation. Across the whole banking sector, we've had the Royal Commission. It can be difficult to sort of compare across the sector. So I wonder, can you talk about where remediation costs are sitting within the ANZ result?
Yeah, and it is really hard to compare. I actually think it's very hard because you've got to look at when you started. So I can't really talk about what others have done. I can just talk about us. We started early, so we've been going for quite a while. Our salaried planners, fee for no service issues, we provided for that and have largely dealt with that in prior years. Last year we took quite a large provision for the aligned dealer groups that we don't own anymore. We took a large provision there. And then we're working through our reviews on the banking side. We've been going probably for 18 to 24 months there, reviewing all our products, trying to do the largest, most riskiest products first. And I'd say we're probably about halfway through the review there.
If we look at capital, which you mentioned briefly, capital generation has been a strength in recent results, but also we're seeing some new capital challenges, whether it's in New Zealand or elsewhere. So can you talk us through where you see the capital picture at the moment and what sort of options you have with capital?
Yeah, sure. I mean, we're in a really, really strong position as a starting point. We're well above APRA's unquestionably strong and well ahead of time. Capital allocation has been a big strength of ours. So we've shown over the last few years that we've been able to allocate capital to its best use to generate organic capital for shareholders. And actually that's been one of the big drivers on top of asset disposals as to why we've been able to do the buyback that we've done. If I look going forward, we've got some challenges, particularly in New Zealand, that we need to work through. It's a bit early to tell what the ultimate impact of that will be. And of course, it depends on what our balance sheet looks like in the future as well. So we just need to work through all of that.
And what sort of things do you think about when you're looking at capital allocation? Because indeed, almost inevitably as capital builds up, there are calls for returns of capital, but across the business, how do you think about it?
Yeah, I mean, the way we think about it is we always look at it and say, we're not really emotional with our businesses. So we say, look, can we drive a better outcome for our shareholders, our customers, by allocating capital into the business or by giving it back to shareholders? That's sort of the first question we'd ask. Across our businesses, we look at whether the return we're getting on our capital is right. So we look very much at risk-adjusted margins or risk-adjusted returns, and it's important to us that we're putting our capital to the best use. And I think that's been a big driver of the changes we've made in institutional over the past few years, and also some of our decisions to sell assets like Asia Retail or our wealth business.
And another factor which it's actually been quite a long period now over multiple results has been the credit cycle, which continues to be quite benign, albeit in this result there's a couple of patches here and there. So can you talk us through how you're seeing the credit cycle?
Yeah, I mean, so the credit environment is very, very benign, and so losses are low, 13 basis points. We know that can't last forever. Having said that, we've changed our book a lot in terms of the way we've changed our portfolio, and that's having a real impact. So if I look at something called our long run loss rate, that's down about a third compared to where it was 3 years ago, which is a really, really big change in a short amount of time. There are some pockets of stress. In home loans, there've been some increases in customers that have fallen behind. It's small in context, and we're coming from a very low base, but there are some pockets that we're watching.
And if we look to the year ahead, and both you and Shane in the ASX releases have talked about what a tough environment it is, and it's not going to change, presumably. So where, as CFO, are you focusing over the next 6 months and 12 months?
Yeah, so if I talk about our Australian business to start with, we think the right thing to do in that business at the moment is to be selective and targeted in terms of the business we do. We think, though, there are some areas where we could do better, and so we're putting quite a lot of focus into just getting that balance right. On top of that, clearly we spoke about the potential capital changes in New Zealand. Definitely a lot of my effort and my time going into how we work through those, and then continuing the disciplined approach to capital allocation and costs, both of which we've had really good outcomes on consistently over the last 2 to 3 years. But we want to make sure we keep that disciplined approach across the business.
Well, thanks very much for your time this morning. Thanks, Michelle.
Thanks a lot, Andrew.